Welcome to Caching Waves. This is a stellar update using Elliott wave theory. Now, there's a completed pattern available. This is the whole basis of this thesis currently. And I want to show you what the idealized pattern looks like. That is a multi-year contracting triangle. How this pattern fills out is we get lower highs and higher lows in a contracting manner till we reach a point of termination, and then we get trend continuation of the previous trend. And in stellar, the previous trend was to the upside, most likely a fourth wave. So this is what we're looking for idealized, and this is what we got. You got to keep in mind there's more price history back here, but we got an A, B, C, D, E. Idealized, real time. Now, why this is so helpful is our invalidation of this being a triangle is right there at the C wave at 7.02 cents. Now you can see I have our labeled E. That is where I'm suggesting the triangle ended. And if we come below that level, it's still valid up until 7.02. But you can see we've already gotten the thrust we were expecting. We've been tracking this way back here. You can go back and watch it. But as of right now, all trade ideas moving forward is that we have an E wave bottom in, and we're looking to add to position here or get into a position if you choose to, and looking for all-time highs. Okay, so we're going to go down to the 1 hour, talk about the pattern off the E wave low. Now, to keep this bullish trend intact, we need to hold above 7.65 cents, this E wave low. Looking for 5 waves up to give us indication that the trend is continuing. Now off the low, we had a wave 1, 2, 1, 2, 1, 2, 3, 4, 5 for our third in green, a zigzag for our fourth, our fifth wave in green to make our third wave in blue, then got our fourth wave and 5 waves up for our fifth in blue. Now common targets for our third wave in blue is take beginning of wave 1, off of wave 2, extend that to the 1.618 extension. That's where you look for your third wave. You can see lines up ideally. Now, one thing that wasn't ideal is we usually look for the 1-to-1 extension of wave 1 off of wave 4, which was all the way up here, the 100%. Looks like we got a 618 extension. It's still completely valid as we can count 5 waves up for our fifth wave, so we do have a completed 5 wave count. Now after that, we're looking for a larger version of this 1-2 to complete a larger 1-2. Common targets for our retracement is between the 382 and the 618. It's kind of a wide zone, as you can see. For our wave 2, this is the zone we're looking for to hold before we get our third wave to the upside. We are right in that zone now, and we look for a 3-wave pattern. Most common patterns for a wave 2 is a zigzag, a 5-3-5 pattern, like so, labeled as an A, B, C. Usually the C wave is equal to the A wave. We can also get double zigzags, which is an A, B, C. We get an X wave and another A, B, C. 5-3-5 X, 5-3-5. Those are the most common. Okay, so from our high, we got our wave 1, 2, 3, 4, 5 for our A wave. This area last video had multiple different options. It had triangle options. I suggested this option as well, that we'd get a running flat. What a running flat is a 3-3-5, or it can also be a WXY as a complex correction. In this case, it looks like we got a flat, very complex X wave and a zigzag. Important things to note, that W wave off this X wave came to right between the 1.236 and the 382 extension of the W wave, a common target. So after this makes our A and B in our zigzag. Remember, we're looking for a 5-3-5. Currently have mapped out a 1-2, 3, 4, looking for this fifth wave to complete in a micro 5 waves. You can go all the way down to the 15-minute, try and get that. And we've already passed the 1-to-1 extension, which is our most common target, right here. And that's where our C wave will equal our A wave. Next targets after the 1.236, the 1.382, and the 1.618. Important to note, that's coming right into our most common targets. So expecting after this wave completes that we continue our trend to the upside. So we're getting very, very close on this. Now, areas where I would suggest potentially it is complete is once we break this fourth wave to the upside and the 618 retracement of this C wave whenever it ends. Right now you'd pull the pivot from there. So if we pass that 618, it's probably complete right here, especially if you see a 5-wave move into that. That's early indications that this trend, this correction is complete and we're moving to the upside. Now there is ways this can be relabeled. That's why I'd say pay attention to that 618. But if you're holding this for the long term, not financial advice, just what I would do, there's nothing wrong with DCAing in this area. If you're not tracking along, just putting your stop at that low at 7.65 cents. I personally risk 1% per trade of my account. And we're targeting all-time highs. I'm not going to calculate the risk reward right now, but it's very high. Alternatively, if you're looking for position size, these are just trade ideas. If you pass that 618, or if you can get a clean 5-wave count over here, you can even get down to the 15-minute micro, wait for the break of a fourth wave, and buy the breakout. Stop goes at this low. So those are very risky trade setups, but they give you the best risk reward trades. You can see how tight that would be, something like that, targeting all-time highs. But I only take those trades when I have a really clean count. Otherwise, I'd prefer to wait for the break of the 618 of this move and just put my stop here. And that would look something like this. So I know a lot of people ask me how to trade the most profitably. It's really based on your strategy, how much risk you want to take. Do you prefer having larger position sizes, or do you prefer having a higher win rate percentage? Because if you take very large position sizes, you can do very well at like a 30% win rate, depending on your risk reward. You can make more than somebody that makes a 70% win rate if they buy from this area and put their stop at this low. An example of that would be, imagine we get this perfect 4-5, and then somebody buys the break of this micro fourth wave. How often do they have to be correct? Say we're targeting the same area. See, this one's a 9-to-1 risk reward, where the other one's a 1-to-1. So you get the idea. Obviously, the more risky one isn't going to win as often, but it doesn't have to. Right? So anyways, looking for this to finish up, just looking for this fifth wave within the fifth wave of the C wave, and then expecting trend continuation. All right, guys, that's it for Stellar. Thanks for watching. I'll see you on the next one.